Today we're going to talk about Bloom Energy stock, ticker symbol B, which plunged about 15.5% yesterday. This drop came after a disappointing U.S. jobs report raised concerns about the broader economy, and the sell-off was much steeper than the overall industrial sector, which only fell about 1.2%. So what exactly happened, and should investors be worried? In this video, we'll break down what Bloom Energy does, why the stock had an incredible run over the past year, why it suddenly dropped so sharply, what analysts are saying about the stock today, and whether the stock might actually be fairly valued or still overvalued. Let's start with the big news. Bloom Energy stock dropped about 15.5% in a single trading session. While the overall market was already under pressure due to weak U.S. job data and rising economic uncertainty, Bloom Energy's decline was significantly larger than the broader market. One catalyst that added pressure to the stock was uncertainty surrounding potential AI data center expansion projects. Investors have been expecting Bloom Energy to benefit from a massive power demand of AI infrastructure. When reports surfaced suggesting that certain large data center plans may not move forward as quickly as expected, it triggered selling among investors who have been betting on that growth story. When a stock has already experienced a huge rally, even small shifts in expectations can lead to large price movements. And that's exactly what we saw here. Now, before we go deeper into the stock movement, let's briefly talk about what Bloom Energy actually does. Bloom Energy Corporation is an energy technology company that produces solid oxide fuel cell systems designed to generate electricity on-site. Instead of relying entirely on the traditional power grid, companies can install Bloom Energy servers that convert fuels like natural gas, biogas, or hydrogen into electricity through an electrochemical process. These systems provide highly reliable power and can reduce emissions compared with traditional combustion-based power generation. Bloom Energy's technology has been adopted by major corporations, hospitals, utilities, and increasingly by data centers that require extremely stable power supplies. As artificial intelligence continues to expand rapidly, data centers are expected to consume enormous amounts of electricity. Because Bloom Energy systems can be deployed faster than new power plants or grid connections, many investors see the company as a potential solution to the growing power demand from AI infrastructure. This narrative played a major role in driving the stock's extraordinary performance. Over the last year, Bloom Energy shares surged roughly 503.8%. That is an enormous gain, and several powerful trends helped fuel this rally. First, the AI boom dramatically increased expectations for electricity demand. Large AI models and cloud computing require massive data centers that consume huge amounts of energy. Many of these facilities face long delays when trying to connect to the electrical grid. Bloom Energy's on-site power systems can help fill that gap, which made the company attractive to investors betting on the AI infrastructure build-out. Second, the company reported strong financial growth. Bloom Energy recently delivered strong revenue expansion and improving profitability metrics. Annual revenue has climbed to roughly $2 billion, and the company has been steadily improving its margins and cash flow profile. Third, Bloom Energy announced several large partnerships and deals related to powering data centers and critical infrastructure. These announcements strengthen the narrative that Bloom Energy could become a key player in the energy supply chain for the AI economy. However, when a stock rises more than 500% in 1 year, expectations become extremely high. That means even small disappointments or macroeconomic concerns can trigger a sharp correction. In this case, the combination of macroeconomic worries, uncertainty about AI data center timelines, and profit-taking from investors likely contributed to the steep drop we saw. Now, let's talk about what analysts are saying about Bloom Energy today. As of March 7th, 2026, analysts generally have a moderate buy to hold consensus rating on Bloom Energy stock. Price targets were revised upward recently following the company's strong fourth-quarter earnings report and several multi-billion-dollar deal announcements related to AI data center deployments. Looking at the overall price target summary for the next 12 months, the average analyst target is about $146.44 per share. The highest estimate among analysts currently sits at $207, while the lowest estimate is about $40 per share. That wide range shows analysts still have very different views on the company's long-term growth potential. Several major firms updated their targets recently after the company provided its 2026 guidance. China Renaissance initiated coverage with a buy rating and a very bullish price target of $207 on January 28, 2026. Morgan Stanley raised its target to $184 from $155 and maintained an overweight rating. Evercore reiterated its outperform rating with a price target of $179. JP Morgan also raised its target to $166 from $154 and maintained an overweight rating. Citigroup initiated coverage with a neutral rating and a target price of $162 on February 24th. Meanwhile, Morningstar increased its intrinsic fair value estimate for the company to about $60 per share, up from $42 previously. So while many Wall Street firms are optimistic about the growth story, some valuation-focused analysts still believe the stock may be priced above its fundamental value. That brings us to the key question. Is Bloom Energy fairly valued today? Looking at the valuation metrics, the stock still appears expensive compared with many companies in the energy or industrial sector. Bloom Energy currently trades at a forward price-to-earnings ratio of around 116. For comparison, many traditional energy companies trade between 10 and 20 times forward earnings. The company's price-to-sales ratio is also very high at around 19, which is more typical for high-growth technology companies rather than energy infrastructure firms. So even after the recent drop, the valuation still assumes very strong growth in the coming years. On the other hand, the bull case is that Bloom Energy could become a critical power supplier for the AI economy. If demand from data centers continues to grow rapidly and the company secures more large contracts, revenue and earnings could expand significantly over the next decade. However, if growth slows or if large infrastructure projects are delayed, the stock could remain volatile because the current valuation leaves little margin for error. Personally, I think the recent pullback may simply be a healthy correction after an extraordinary rally. Bloom Energy operates in a very exciting industry with strong long-term demand drivers, but investors should still remember that the stock's valuation already reflects very high expectations. All right, that's all for today's analysis of Bloom Energy stock. If you found this breakdown helpful and want more videos analyzing trending stocks and major market news, please make sure to like this video and subscribe to the channel. Thank you so much for watching, and I'll see you in the next video.